Good evening and welcome to PreciseAlgorithmTrading.com. It is Saturday, May 27th. I'm going to do a wrap up for the weekend based on Friday, obviously May 26th. And yeah, let's just get into it here. So, make a quick wrap up and then go into a nice long Memorial Day weekend. So, on Friday, this is the S&P 500, and the actual S&P went up 1.3%. The E-minis actually went up 1.43, so that means that they went up a little bit more after, I think, the market closed into the weekend, which is pretty bullish. And we've been talking about this for a bit. Um, so the 786 line held. We're up past this 100% line. We were before, and then it got pulled back under. We're in a squeeze. Um, I'm actually working on something else that's going to be uh, either augment or maybe replace the True Momo indicator down here to give me a better look at really what I'm trying to do is get position trades that go on for a while and swing trades really just to trade in and out of options so I can have my options just maybe put them on for the end of next week and then take them off by the end of next week. So yeah, basically 1 week options or maybe 2 week options. So that's what I'm working on. But anyways, so this is the S&P 500, and it was a nice pop on Friday. Um, the Russell had a nice pop on Friday as well. Even though it's been in the doldrums, we do have a buy signal on the daily. We don't have it on the weekly yet. The Dow was up by 1% on Friday, and we don't have a buy signal yet, but that is quite a reversal. 342 points. The NASDAQ went up big on Friday, 390 points, 2.8%. And you can see, for what it's worth, this is the yearly high, so 52-week high, and we're up at the 52-week high, which is good news. The last 52 weeks have been a little bit rough for the markets. So the transports, they're still down, really looking to potentially take off here, it looks like, but we need to get past this downward resistance, diagonal resistance. This looks like a falling wedge pattern, or falling megaphone pattern, which is they always have to break back to the upside eventually. And oil went up by 1.45%. It doesn't look like it wants to cooperate real well. There we go. We got a buy signal on oil that's really followed through from the other day after a head fake back to the downside. We do not have a buy signal yet on the weekly, and we're also red here on our midline indicator there. So, and we're in a squeeze. So from here, I guess I would expect it to get back up into this 80 range, 82, but not necessarily. We could fall from here, but we shall see. It's all going to be based on really can we get up past these and get momentum going to the upside. So then we go to stockcharts.com. We'll type in bullish, pull up the bullish percent indexes, and see what's happening really just with buying and selling pressure. So really what this is 9.0% more stocks went to buy signals in the Dow Jones Industrial average. So on Friday, this is a measure of buying sentiment. So the NYA up by 0.31%. The transports didn't move. The NASDAQ up by 1.85%. The S&P up by 1.28%. The OEX up by 2.04%. No thanks. And the NDX up by 1.72%. So everything was pretty bullish there. Some of them didn't move, but yeah, not well. It was quite a move, and what we really need to see here, just to reiterate a little bit, once we go back to the ES. So we need to see follow through now. We've got this zone, and I've drawn it on before. I wonder if I still have it drawn on the SPX. So it was really this box. I'll draw it on. And we had a head fake out a week or so ago, and then it got pulled back in. Now we've had, in theory, this shouldn't be another head fake. I mean, it's basically saying that we've got the momentum, we've got the buyers, or the lack of sellers anyway, and maybe that's the zone we had to get ahead of. And so now we just need to see follow through to the upside. So, all right, going to the automatic trading systems, and we'll wrap this thing up. So this is the Dow, and on the weeklies or during the weekends, I try to go. I didn't do it here. Yeah, actually, I did do it. So this is the quarterly contract from so far from 11.29 to 5.26, and the Dow, after putting in a nice new high there, has fallen off. This is our equity curves. So this is what the sum of all of our trades it looks like, and this is what the actual trades did on some of them on Friday. I don't think I got them all, but so I mean, this one's the first one over here is kind of a bummer. It ended up being, looks like a positive trade because it's a blue line and not a red line. But I mean, it made it all the way up here and then reversed. So you might say, well, why didn't you take profits up there? Because it's automatic, and it didn't have a signal to get out up there. So, and if you try to second guess these things, I've done it in the past, you will be wrong. And when you add all of them together, this is what our equity curve looks like. So I don't want to second guess what this thing is, because I really want to go from this consolidation that we have going on here, that was something like back here, to getting a whole new run at all of that meat right there. That's what we're trying to get to. So this is the Russell and this is the quarterly contract. So and we had a nice new equity peak back here, and we've fallen off since then. So this is what these trades, some of these trades on Friday looked like, and you can see they were just little things, but that's what it looked like even here. They're just little trades, and there's just a few of them, nothing major. And so we had that looked like a tiny little winner. This one up here looks like a little loser. I think that was a loser, so that makes sense based on what we're looking at. But when you add all these together, this is what a year's worth of data looks like. So this belly should be followed up at some point with some more meat. So, and then the NASDAQ, which is still my favorite, this is what Friday's action looked like, and I went ahead and threw in some. So this is really what that trade looked like here on a chart, and that thing, sometimes these things just grab hold and they go all day, and sometimes you get a nice big pullback like this happened, and then you get a signal to get out. And so what this is, again, I've shown this type of thing before, but literally on Friday the 26th, that was that trade we were looking at. So the NASDAQ has been doing better lately, and this is what it looks like when you got 12 months worth of data. So, and you have to weather these pullbacks, and that's literally, So when I talk about this stuff, you have to have 3 to 4 times the amount of your largest pullback as far as your account value goes. And the reason is because you don't, literally, you might start a trading system like here and then go underwater immediately. So you need to be able to weather that with capital, or else you're going to get washed out. And they'll stop your trading, and you won't be able to afford the next trade, and then you'll just be underwater forever. So you have to start out with enough capital, stay ahead of enough capital so that you can get. Traders go broke. I mean, that's the bottom line. So anyways, hope that makes sense. Hope it helps, and I hope everybody has a great Memorial Day weekend. Take care, good trading, and we'll talk to you next week.